This is the Clear Money Talk podcast, offering up creative solutions for your retirement future through education, choice, transparency, and empathy. Now, your host, CEO and founder of Clear Financial Partners, Tim Claremont.
Welcome to Clear Money Talk. I am your host, Tim Claremont, CEO and founder of Clear Financial Partners, and I am here, of course, with my compatriot, my partner, Tyler Andrews. So good to have you here, Tyler.
Thank you, Tim. It's good to be here.
Yeah, it's always fun to discuss the answers to questions. This question today is one I know a lot of people are probably curious about, and I don't want to mislead people. I cannot predict the future. I cannot tell you what's going to happen in the stock market in the next week, day, hour, let alone the rest of this year, and how all of that's going to play out. But I can give you some insights into how things are likely to affect the stock market as it relates to an election year. And the question today is, Tyler?
How will the election year affect the stock market?
How will the election year affect the stock market? So a lot of people believe historically that when you end up with one particular party coming into power, that you have this massive, amazing stock market response, and whatever that particular party is happens to be whichever party you like. So a lot of people make the argument that if they're a strong, just convicted Democrat, that if the Democrats are in power, then the stock market's going to skyrocket, and if they're a strong convicted Republican, the Republicans are in power, then the stock market's going to skyrocket. And the truth of the statistics and everything that I've ever seen is that just doesn't hold water. It doesn't really matter which party gets into office statistically as to what's likely to happen in the stock market. At least we haven't seen any evidence to support that. Frankly, think of it this way. If there were evidence to support something along those lines, don't you think that the winning party with the winning evidence would actually be quoting the evidence to you? Like they would be putting it out there and saying, of course, we win every time, 90% of the time, market goes up. Why wouldn't you want the market to go up? Vote for us. If it was that compelling, then you would already see and hear that evidence all the time because they would be using it in their campaign. And that just hasn't been clearly the reality. Well, in order to better understand the answer to this question, you have to think about what the stock market really represents. And people think all the time, and they hear the S&P 500, like, okay, that's the stock market. And for some people, that really is the only measure of the stock market that they pay attention to. The S&P 500 is the biggest 500 companies in the United States. It's a weighted index. It's a snapshot of what's going on in the stock market. It certainly has its pros and its cons as it relates to the index. You can compare it to other indexes like the Dow or the NASDAQ, the Russell 2000, or some of the global indexes like the EFA or some of the other, the Hang Seng Index, some of the other indexes that are international. But all an index is a representation of a bag of stocks and how much they're worth if you sold them all to a willing buyer at that moment in time on that day. And every stock represents the same thing. It's all ownership in a company. So when you buy a stock, you become a part owner of that company. And when you're trying to figure out how much a company's worth, typically people are looking at, well, how much money does the company make? And that's the profit on an annual basis. Every company's the same. You got earnings that come in, you got expenses that go out, and the difference is profit. If the expenses are greater than the earnings, the company's losing money. And if the expenses are less than the earnings, the company's making money. And it really is as simple as that. And there's products that can be sold for a company or services that can be provided or a combination of the two. It doesn't need to be any more complicated than that. So when you're pricing the value of a company, it's sort of like if I owned everything in this particular company, I would have the right to all of those profits that company makes in perpetuity for the rest of my life. Right, for the rest of the existence of the company. That's the nature of owning stock. You own the company. If you own the company forever, you get the rights to all those profits forever. So how much is that worth? Depends on the company, right? Some companies are going to have, let's say revenue comes in as X and expenses go out as Y, and the difference in profit is Z in our examples here. Well, what happens if certain parties get in control in an election year? If you have some of the parties' policies favor certain types of companies, the other parties' policies will often favor other types of companies. For example, traditionally, Republican Party is a pretty strong believer in defense stocks. So a lot of times, defense contracts, government spending on military equipment, things like that, are more likely to be favored in a Republican environment. Therefore, companies that sell products or services that are related to the defense industry might stand to benefit if the Republicans ended up in control. On the other hand, the Democrats tend to have a stronger leaning towards environmental things, trying to keep our world green. So when you think about things like wind energy and some of the other energy strategies that are out there, alternative energy scenarios, those companies that work with products and services that are more likely to benefit from support from government spending in those areas are likely to do better in a Democrat sweeping political year. The problem isn't knowing, isn't knowing, okay, the Democrats are going to win or the Republicans are winning, or this is what's going to happen, and therefore this is what's going to happen. The problem is the not knowing. See, the stock market is ultimately pricing the value, the resale value of all those companies every second of every day. Whatever a willing buyer is willing to pay for that company is what it sells for. So if you have a close year in an election year and you don't know if it's going to go blue or it's going to go red, then you don't know which of those companies are going to be doing better or worse. So that creates uncertainty. Uncertainty translates to volatility. So if it looks like there's going to be a big push one way, then you're likely to see those stocks juggle a little bit. The blue ones go up, let's say, and the red ones go down if the Democrats look like they're going to win. And then all of a sudden, the news comes out, it looks like it's going to go red. Now the red ones go up and the blue ones go down. So you see that volatility. You see a lot of ups and downs. So the one thing that I would say you can typically count on an election year in the stock market is movement, volatility. You're going to see that stock market go up and down. And then typically, regardless of who ends up in office after the election is over, there's no more uncertainty. You know who's in control now, therefore those stock prices settle and people have clarity around, okay, that's who's in control, and you see the stock prices settle. But for all the ones that tend to go up when the Democrats win and go down, when the Democrats win, there's the opposite effect when the Republicans win or when the Republicans lose as far as that situation. And consequently, when you're in everything, like most of us are, when you're in a blend in an index portfolio that has a lot of the things that benefit in a blue environment, a lot of things that benefit in a red environment, then your whole portfolio is simultaneously, some things are going up, some things are going down at the same time. The overall net effect is often, just some volatility, not a whole lot of clarity around which way it's going to go. So if you have a crystal ball and you know who's going to win, well, take a look at the kinds of companies that are going to benefit in that kind of environment. But recognize that if you bet on companies that are going to do better in that kind of environment, and it turns out you're wrong, the other party wins, you stand to suffer the most. If you're right, you stand to reap the greatest rewards. I don't try to recommend investing based on that kind of volatility. I believe that owning a little bit of everything and letting the entire market as a whole bring your growth in the long run tends to be the better strategy. Though, of course, we can't predict future performance of the stock market in any capacity, stocks, bonds, all that stuff. They're speculative investments. They can go up or down in value, and ultimately your earnings are going to be related to what did you pay, when did you buy it, what did you receive if you sell it, and when did you sell it, and what to buy, when to buy, what to sell, when to sell. Your answer to those 4 questions will be everything in terms of your success in investing. Long term, I usually recommend having at least 3 to 5 years before you plan to sell any stock position if you're planning on investing. I don't recommend that short-term market swing scenario. That doesn't mean if you got into something recently and haven't waited 3 years, you should hold it either. You may have gotten into something bad. I don't know. That's up to you and how you're handling it. But having a good, diversified, smart portfolio and doing smart things with your money, that's what we're about. I want to have consistency, stability, and things that my clients can count on when we're investing our retirement income savings particularly.
Yeah.
That was a long monologue. You didn't get a lot of back and forth with Tyler. I'm just staring at Tyler having this conversation.
No, it's good. I'm just like a listener today. I'm just deer in the headlights enjoying this, frankly, Tim. And you're you've been doing this for so long, and not to make you sound old by any means, but
I am old though. I feel it. The gray. 47 now.
you have a lot of knowledge to bring to the table with this stuff. You've been doing this on a day-to-day basis and seen many elections, presidential elections, other elections, things in between, and you've seen the real world application of how that does affect the stock market, bond market, capital markets in general with this stuff. And I think you had all your points were solid, by the way, but there were a few.
Thanks, man.
There were a few really good ones.
If you thought they were weak, I would expect you to call them out.
No, I would
okay.
never. I'll keep that to myself. You had some really good points, and I think the listeners and I know for myself, I definitely appreciate that. And uncertainty is oftentimes what leads to volatility, like you were saying. And we've even seen that in the past couple of years when we haven't even been up against the door of a presidential election. We've seen uncertainty with interest rates. We've seen uncertainty with inflation. And when we don't know which way those levers are going to go with interest rates, up or down, those levers, or inflation up or down, it makes it hard for us to plan. It makes it hard for us to plan short-term and long-term. And when we don't know how to plan adequately, it leads to uncertainty, which leads to volatility, which leads to a scarier environment than if we knew everything that was coming in the future. It makes it a lot easier to plan for. So, and then that leads to your next point, which is investing is a long-term strategy, long-term goal. Usually we don't invest for the short term. Usually we're recommending investing for the long term, riding through the hills and the whoops and the bounds and doing the right things for a long period of time. Usually you'll reap nice benefits from doing so. Without guarantees of that.
Right. We can't give you guarantees of future performance. No. I mean, there are kinds of accounts that are conservative and do have guarantees. They're just usually when the safer and more stable a portfolio is, more than likely the lower rate of return you're expecting to receive. There is something called a risk premium. The more risk you take, the higher return you typically expect to receive. And there's just a range of risk that's reasonable. We will not go outside of our comfort level when it comes to risk for our clients. A lot of times I'll talk to clients about risk on a scale of 1 to 10, 1 being very conservative, 10 being very aggressive. So a 10 risk portfolio for us is typically thousands of stocks all over the world managed by phenomenal institutional money managers that are making day-to-day decisions on what to buy, when to buy, what to sell, when to sell, to try to create optimal growth for our clients in a diversified environment. That's our 10. That's as risky as we get. When you start to blend some bonds into that portfolio, maybe half stock, half bonds, we start to end up with something like a 5. And if you're like 100% bonds or cash or really, really, really conservative, depending on the types of bonds, it could be as low as a 1 or a 0, even depending on the kind of accounts that you're in. That doesn't mean that a 10 is the most aggressive thing you can do. If you decide, I'm going to throw all my money in these 2 or 3 stocks and just see what happens, that's not a diversified portfolio. There's no professional money management behind that strategy. That's you betting on a few horses that you think are going to come across the finish line first. And that's like a 50 on my scale of 0 to 10. We won't do that for our clients. There are people who will, and they can help you bet the racetrack, and that's fine if that's what you want to do. That's your money. You have the right to do what you want to do with your money. That's totally cool. But with us, our clients look to us to create consistency as best we can. So we just don't go above a 10. We'll go 0 to 10, that's fine. If you want to go above that, that's fine. If you've ever heard of things like futures or commodities where you're actually betting in a leveraged capacity on future prices, that's like 125 on my scale of 0 to 10. And it's just important to understand that risk is relative. But generally speaking, the higher the risk you take, the higher the return you should expect. Also, the higher the chance you have of losses to an equal degree, typically.
Yeah, and most people don't like to see losses. I think most of our listeners would rather see gains opposed to losses.
That's right. Every client wants 3 things. They want access to all their money all the time, so they can access it just because they want it, it's theirs. They want to not lose a dime. They want to make sure they never lose anything. And they want to make a phenomenal rate of return. That's what they want. They want all 3 things. And no account has all 3 things that I've found yet, but typically you can lean pretty hard into 2 of them as long as you're willing to sacrifice a little bit of the 3rd one. And you just have to find out what are the right investments. If I'm willing to give up one of those things, what's that thing I'm willing to give up a little bit of so that I can get more of the other 2? And that's the kind of conversation we get to have with clients as they make those decisions.
Yeah. Hey, going back to our original question, how will the election year affect the stock market? I do have a question for you, Tim. Do you think any other underlying economic activities that are happening right now Doesn't have to be political, but it can just be inflation, interest rates, the geopolitical atmosphere of the world. Do you think certain aspects of those are going to help the stock market when we're coming up against this presidential election, where we might experience normal volatility? Historically speaking, where, like you said, we'll see some potential stock market volatility just with the election and the uncertainty of that. But do you think those other levers that we were talking about, interest rates, inflation, geopolitical, other factors, might help move the stock market one way or the other to help stabilize things or push it far one way or the other?
Yeah, no, I absolutely. It's funny, the analogy that comes to my mind is, I don't know if as a listener you're familiar with this story, but in ancient Greek stories, there's this discussion about a sailor who is, actually I think it's Odysseus. I think this is from the Odyssey, so
getting real nerdy.
Homer, I know, I get it. So, but there's this moment where they can see home, they're almost home, and they're just dying to open this bag that they had received from some god in this storyline, and they're not supposed to do it. As long as they don't open the bag, everything's fine. They've got this great wind at their backs and the sail, and they're flying home, and then they open the bag, and it's the bag of winds, and it basically has all this wind coming from all these different directions, north and south and east and west, and it just bounces the ship all over the place, far away from home, and they have to go through all these stories to try to get home again because of this one sailor's curiosity in opening this bag of wind. And the stock market is very similar to that. There are a ton of different winds that are impacting our sailing experience. And as we talk about an election year, frankly, that's only one of the wins. And so when we think about, I don't know, if it's a really big year and there's some really sensitive policies that are going to make some very clear winners and losers that are going to really hurt one company or really help another type of company or one industry or another industry, the more extreme and obvious that pain or pleasure is, the more likely you'll have a stronger wind and more volatility and the market going up and down a lot more. For example, if you had one party coming out and saying that they're going to, identify that Amazon is so big that we have to break it into a bunch of little companies, and that's going to turn it into, just like the Baby Bells from AT&T, because they have a monopoly on everything we could possibly deliver. Theoretically, let's say that became the main thing that one particular party was that was their policy they wanted to get into place.
Sure.
Okay, that's going to freak a lot of stuff out because if that party wins and that hurts Amazon, then Amazon's like the biggest company out, one of the biggest companies out there in the United States. That's going to have a massive impact on the stock market. And then if the other company wins and they're like, yeah, that's not what we should be doing at Amazon. We should be doing this, that, or the other. Or what we should really do is create a subsidy for electric cars. It's going to help Tesla out and blah, blah, blah. And now all of a sudden Tesla's got a huge win if they win, and vice versa, or however this plays. These are the kinds of things that are going to drastically affect one or two specific companies. And the bigger the companies are, the more drastically that policy is going to affect them, the more likely that wind is going to have an impact and create that volatility because of all that uncertainty surrounding those particular companies, and that could be theoretically tied to the election. On the other hand, if the policies that are being fought about in the election are not as obviously going to benefit or hurt certain companies, then it's a lighter wind. You're not likely to see as much volatility in the stock market because it's not as clear how much impact it's going to have. Yeah. And if you end up with a sweep, a red or blue sweep, in other words, the House, the Senate, and the presidency all go to the same group, that is more likely to lead to volatility and continued uncertainty in the market, as opposed to a hung jury, if you will, where you end up with a mixed bag. Because if you end up with some blue and some red in those three scenarios, it means that it's going to be less likely that things are going to change. And change is the thing that makes the stock market afraid, because it doesn't know, is it going to be a change for the better for these companies or for the worse for these companies? And if you have uniformity, if you have all three, the House, the Senate, and the presidency all under the same leadership of the same group, you have a higher probability of change, and that higher probability of change creates more uncertainty, therefore more volatility. Now, regardless of your political affiliation and wherever you may fall, I try to be as neutral as I can in this process. However, it's only natural that I would communicate to the listeners, and I don't know if this is going to make you love me or hate me, but this is the reality of it. Tyler, I know you're aware of this. My wife, Crystal, and I, we've been living downtown for a while now. So we moved downtown in 2016. We grew up in the suburbs, Beaverton High School, all that stuff, and raised my family in the suburbs. And then ultimately, Marshall raised my son at Lincoln High School downtown. After that, they're all out of the house now. I'm an empty nester, and I've decided I can't keep living downtown the way that I'm living downtown and not do something about it. The homeless situation is bugging me. The crime situation is bugging me. I hear police sirens often. I didn't used to hear those 5-6 years ago. It was a mecca downtown. I keep talking to my clients, and they say, Tim, if I go downtown, I put on the gas. I try to get through as fast as I can. The last thing I want to do is go downtown. I try to avoid it, and that just makes me sad because that's my front yard.
Yeah.
And so I've been looking into things and trying to figure out, okay, are we going to stay here or are we going to move back to the suburbs? And Crystal and I decided we're going to stay. We love it. We live right next to Powell's bookstore downtown, but I can't stay and not try to do something about it. So I have made the decision. I'm going to be running for House District 33. I'm going to be running for the state legislator to become a state representative and see what I can do to try to make our state better, because it takes people standing up and saying, okay, if not you, then who? I will answer that call. If you want me to, I will run, and I will be glad to be your state representative for House District 33. That's the downtown area, Northwest 23rd. And for those of you who are wondering about my political affiliation, I can now communicate what that is to you, because I am a fiscally responsible Democrat. I believe in almost all the policies that the Democrats put forward on their planks. However, you can't take the smart money out of me. I gotta do smart stuff with money. That's how it's who I am. It's how I feel about things. And I think people should have the right to do whatever they want to do, as long as it doesn't infringe on other people's rights. And that's very democratic when it comes to social policy. But I still think we should be smart with our money and make sure that we're actually making a difference when we're using our dollars. So that is the platform that I will be running on, and hopefully the Democrats in House District 33 will decide to vote me in to support them, and I'll see what I can do to continue to help both doing retirement income planning, as I can continue to do that with Clear Financial Partners. I'll continue the Clear Money Talk program and everything else we're doing. But in addition to that, if they vote me in, I will happily run for that state position and see what I can do to make things better, because we all have to do that. And if you want to do something about it, man, reach out to me, because we need all the hands we can get to make this place a little bit more the way it used to be, and a new version of better the way it can be.
Yeah. Congratulations, Tim. I think that's such an exciting endeavor, and I don't know a better person to step into those shoes and into that role than yourself. And you're the right man for the job. I know that. And we'll keep man in the ship over here, Clear Financial Partners, unchanged, just as how we ever have been. Frankly, we might even have more gusto and power behind us and motivation than ever before with this new endeavor on what you're taking on. But yeah, if anybody wants to help out, feel free to reach out to us and see how you can help Tim on his new adventure with this.
Thanks for that.
So,
Thanks for that. By the time this airs, Tim Claremont for Oregon should be up and running. So if you want to learn more about how I'm running or how you can get involved, please just take a look at that. You can Google search Tim Claremont for Oregon. I'm sure my website will be up and running there, and let me know. And if anything is bugging you and you live in that area, tell me about that. Mm-hmm. I've got a separate email just for the political stuff. It's timclaremont@clearfp.com. So you can just email my full name at clearfp.com for political related communications. And I want to hear from everybody how they think we can make this better, so that we can actually try to do something, try to make things better. For our Just the Answer.
Yes, Just the Answer.
Yeah, we got to get down to the bottom line here. For those of you who are only listening for a few minutes, the quick question here is, Tyler?
How will the election year affect the stock market?
How will the election year affect the stock market? The answer is the volatility, the lack of certainty surrounding who is going to win will ultimately lead to a lack of clarity on how much certain companies are worth. It'll sway both ways depending on which party looks like it's going to be in power and how strong their policies are likely to influence those particular types of companies. So the answer is, you're likely to see the stock market bounce up and down a whole bunch till the election's over. And the closer the election is, the bouncier it'll be. And then when the election's over, you'll probably see it settle and kind of get back to normal again. That tends to be the trend, regardless of which party ends up in power. That's the quick, just the answer from what we've seen historically. Though, of course, I can't predict the future, and past performance does not necessarily indicate future results.
Disclosure.
All know those disclosures. That's right. I have no crystal ball here. So
No,
but
yeah.
happy to talk on this topic.
Absolutely. Yeah.
You got any trivia for us?
I do have trivia. Any final on that topic? I feel like you covered it really well, frankly, and it's just kind of a hurry up and wait and see what happens type of thing.
Too true.
Yeah.
Too true. So
Yeah.
yeah, fingers crossed, and hopefully we keep doing the best we can to make our make our city, make our country
world
better.
Yeah. Country,
Our
world.
Yeah.
It all starts, right where you're standing, to your city, municipality, state, country, nation, world, universe, galaxy,
Universe. That's
the
right.
Milky Way.
We're all just guardians of the galaxy. Just
Hop into a black hole, end up in another galaxy,
That's
make
right.
that one better.
You never know. So yeah, it all yeah. What does it? Think global, act local. So
I like that. Yeah.
Right. Yeah. Anyway, trivia. What do you got for me?
All right, so
Stump the nerd.
Stump the nerd time. This
Stump
is always
the nerd, yeah.
this is always uniquely one of my favorite parts of the podcast.
All right.
It's kind of a riddle, kind of a question.
Okay,
So
all
switching it up a little bit. Are you ready?
I think I'm ready. I'm as ready as I can be, Tyler. What do you got for me today?
You are given 3 positive numbers. You can add these numbers and multiply them together. The result you get will be the same. What are the numbers?
I can add the numbers and multiply them together,
Correct?
and whatever result I get is going to be the same.
Correct. 3 numbers.
1, 2, 3.
That was too easy, man.
So, yeah, because 1 plus 2 is 3, plus 3 is 6.
Yeah.
And 1 times 2 is 2, times 3 is 6. So
the same thing. 6 times
1, 2,
1.
3. That's pretty
Nice
good.
work. Yeah. It's a fun one.
That is a fun. I love
Yeah.
math problems like that. That's exciting. I've never heard that before, but it was like, oh, yeah, that math just kind of worked out a little bit. So
Okay.
I appreciate those lower answers. If it was like 55, 82, and 143, I never would have got it.
That would take a while
Yeah,
to figure that one out.
yeah.
No, nice work.
1, 2, 3. Well, thanks for that, man.
Very
Thanks
cool.
for that. No, it's all
Yeah.
good. Sorry if I didn't build up the suspense a little bit longer.
No,
but
it's okay.
No, it is what it
We
is.
have those on previous podcasts if you want to tune in and listen to those ones.
most of the time it takes me a lot longer than that. So
That's
it's,
good
yeah,
work.
No,
Good
appreciate
work.
it. Appreciate
Yeah.
it. Appreciate it. As always, we appreciate your minutes. We appreciate your listening to Clear Money Talk. I hope that you found this worthwhile. I hope you found it a little bit enjoyable. And if you learned something smart about money today and haven't yet been counted, I am trying to teach 1 billion people something smart about money. So go to somethingsmartaboutmoney.com. Get counted. Say, yeah, I've taught, Tim's taught me something smart about money before. You can only get counted once. So if you've already been there, you don't need to go again. But if you've never been there and you've ever learned something smart about money, please go get counted. We're trying to, if it's not measured, it doesn't count. So we're trying to count all the way up to 1 billion people that we can teach something smart about money to. I hope that we have taught you something else smart about money today.
Absolutely. If you want to get a hold of us and chat, ask any questions, or get to know us more, or see if there's anything we can do for you, give us a call, 503-579-1000.
That's right. And we are still taking clients. Retirement income planning is what we do.
Yeah.
We've got clients all across the United States. Most are here in the Portland, Vancouver area. If you need help with your retirement income planning, you have a 401k to roll over, maybe you're nearing your own retirement, definitely reach out to us, and we're happy to have that conversation. First step is a no obligation, no cost 15-minute conversation. We'll just schedule that with you, and you'll have a chance to talk to me and see what we can do to help you out. 503-579-1000. Talk to you soon.
Investment advisory services are offered through Clear FP Advisors, LLC, or Registered Investment Advisor. Securities are offered through Clear FP Securities, LLC, member of FINRA IPC. Exposure to ideas and financial vehicles discussed should not be considered investment advice or a recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments may fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Timothy Claremont is licensed in your state, please contact his office. Clear FP Advisors, Clear FP Securities, and Clear FP Life LLC are not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide tax and/or legal advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Clear FP, LLC NPN number 1942837 and/or Clear FP Securities NPN number 197499604. Any discussion of general investing strategies or specific securities are for conversational purposes only and should not be taken as a guaranteed endorsement or recommendation.